Dang, William, back at it again with the mortgage information. So that is a throwback to a time when mortgages were pure, wholesome, and COVID-19 did not exist in the world. So yesterday on one of my videos, Gary McCullough, shout out to Gary, asked me, why does it seem that some closing costs are going higher? Usually you're going to see this on government-backed loans like FHA, USDA, and VA. The reason for that is because COVID-19 has caused havoc in global financial markets everywhere. The way that it has affected the mortgage-backed securities is because government-backed loans have to be sold to an investor. The way that the secondary market works for a mortgage is mortgage company A makes a loan for $150,000 with an FHA loan and then sells it to an investor for 150 basis points, which equals about 1.5% of the loan. Now, due to the unemployment rate and due to the fact that it is becoming riskier in today's environment to originate a loan because there is a higher possibility of it not being paid back, mortgage companies have kind of slowed down buying government-backed securities because typically they are seen as a higher risk investment. If somebody can't qualify for a conventional loan, a lot of times they go the government-backed route instead because there are certain circumstances, in most cases, that will make it easier to buy a house. Now, if somebody used to buy a loan for 1.5% of the loan amount, now that same investor is not buying a mortgage at all. If they are, they're paying literally pennies on the dollar compared to what they used to pay. Mortgage companies, to keep the lights on and to keep paying rent in their offices, have to then charge higher fees. That means that maybe you'll see a point or two of origination costs tacked on to the mortgage. So if that origination cost is being tacked onto the transaction up front so that mortgage companies actually stay profitable, that means that the closing costs have gone up. So origination equals closing costs. Say that you have a $150,000 loan and somebody with a 643 credit score is getting that. They may have to pay a 2-point, 1 point, however many point discount on 2 points for $150,000. That would be a $3,000 charge because it's 2% of the loan amount. That is why closing costs have seemed to gone up lately. Now, if you have any other questions, if you are like, man, that's interesting, I want to know more about X, let me know. You can either comment in the comment section down below, or you can send me an email, will.looper@movement.com, or heck, if you've got my phone number, text me. I'm happy to answer them and make a video for you. You guys have a great day. This literally took me like 12 times to get through because I kept messing up, including doing the whole thing and forgetting to press the record button. So welcome. I'm glad you made it to the end of this video. I'm happy to be here. Have a great Thursday, guys. We'll talk to you soon.